Welcome to SS2 Commerce. Today we study NAICOM, the National Insurance Commission of Nigeria, and the regulatory framework governing the insurance industry. Understanding insurance regulation is important because it protects policyholders, maintains financial stability of insurance companies, and builds public confidence in insurance as a risk management tool. NAICOM, the National Insurance Commission, is the statutory regulatory body for the insurance industry in Nigeria. It was established by the National Insurance Commission Act of 1997, Capn 53 LFN 2004. NAICOM replaced the earlier Federal Ministry of Finance Insurance Department as the industry regulator. NAICOM is headquartered in Abuja and has offices in Lagos and other major cities. NAICOM mandate: regulate, supervise, and develop the insurance industry in Nigeria. Protect insurance policyholders and beneficiaries. Approve new insurance products before they can be sold. License insurance companies, reinsurance companies, brokers, agents, and loss adjusters. Ensure compliance with Insurance Act 2003, principal legislation governing insurance. NAICOM is led by Commissioner for Insurance, Chief Executive appointed by President and confirmed by Senate. Board of Directors oversees NAICOM governance. Directorate departments: market development, technical, finance, legal, consumer protection. NAICOM performs 8 major regulatory functions. 1. Licensing. NAICOM licenses all insurance entities. Insurance companies, life and non-life. Reinsurance companies. Insurance brokers and agents. Loss adjusters, claims assessors. Actuaries and other insurance professionals. An entity cannot operate in insurance without a NAICOM license; doing so is a criminal offense. 2. Solvency supervision. NAICOM requires insurance companies to maintain minimum capital and solvency margins to ensure they can pay claims. Minimum paid-up capital requirements, as of 2021 recapitalization exercise. Life insurance companies, 8 billion naira. General, non-life, insurance, 10 billion naira. Composite, life plus non-life 18 billion naira. Reinsurance companies, 20 billion naira. NAICOM conducts regular financial examinations of insurance companies to verify solvency. 3. Product approval. All new insurance products, policy wordings, premium rates, terms and conditions must be approved by NAICOM before they can be sold to the public. This prevents insurance companies from selling unfair or ambiguous policies. 4. Market conduct supervision. NAICOM supervises how insurance companies and intermediaries behave in the market, ensuring fair marketing practices, prompt claims payment, and ethical conduct by brokers and agents. 5. Consumer protection. NAICOM has a consumer protection unit that receives and investigates complaints from policyholders against insurers. Mediates disputes between policyholders and insurance companies. Can order an insurer to pay a legitimate claim. Can impose sanctions for claims repudiation without valid reason. 6. Compulsory insurance enforcement. Certain insurance covers are compulsory by Nigerian law, and NAICOM enforces compliance. Third-party motor vehicle insurance. Every vehicle owner must have minimum third-party insurance. Motor vehicles, third-party insurance, Act Capm 22. Group life insurance. Employers of 3 or more staff must take group life policy for employees. Pension Reform Act 2014. Occupiers liability insurance. Public buildings, hotels, cinemas, hospitals, schools must insure third-party liability. Builders liability insurance. Under construction buildings above 2 floors must be insured. Aviation insurance, required for all aircraft, NCA/NAICOM joint regulation. 7. Market development. NAICOM promotes insurance penetration and awareness. Insurance penetration in Nigeria is very low, less than 0.5% of GDP compared to South Africa at over 12%. NAICOM develops new market segments: agricultural insurance, microinsurance, Tokafo, Islamic insurance. Market Development and Restructuring Initiative (MDRI) NAICOM Program to grow the market. 8. International cooperation. NAICOM cooperates with international insurance regulators. International Association of Insurance Supervisors, the IIS Global Standard Setter. African Insurance Organization, AIO NAICOM is a member. ECOWAS Insurance Task Force, for regional harmonization of insurance regulation. The Insurance Act 2003, CAPI 17 LFN 2004, is the primary legislation governing insurance in Nigeria. Key provisions. Defines the types of insurance business. Sets minimum capital requirements. Specifies policyholder protection requirements. Regulates insurance marketing and distribution. Establishes NAICOM powers and enforcement. Key compulsory insurance covers in Nigeria. 1. Third-party motor insurance. Minimum liability cover required for all motor vehicles, yellow card for international driving. 2. Group life insurance. Minimum 3 times annual salary for each employee, required by Pension Reform Act 2004/2014. 3. Marine insurance. All imports must be insured with Nigerian companies, External Trade Act. 4. Public building insurance. Buildings used by public must insure third-party liability. 5. Builder insurance. Buildings under construction. 6. Healthcare. NHIS National Health Insurance Scheme, being replaced by National Health Insurance Authority, NHIA. Insurance regulation in Nigeria faces several challenges. 1. Low insurance penetration. Nigerians distrust insurance companies due to past claims repudiation and weak enforcement. 2. Fake insurance certificates, especially for motor vehicles, widely available illegally. 3. Undercapitalized companies. Some insurers lack capacity to pay large claims. 4. Consumer awareness. Many Nigerians do not understand insurance products or their rights. 5. Claims settlement delays. Some companies delay or dispute legitimate claims. 6. Enforcement gap. Compulsory insurance laws, especially motor, poorly enforced, VIO only intermittently checks. Summary of NAICOM and Insurance Regulation. NAICOM, established 1997, regulates all insurance in Nigeria, HQ Abuja. Functions: licensing, solvency supervision, product approval, market conduct, consumer protection, compulsory insurance enforcement, market development. Minimum capital: life 8 B naira, general 10 B naira, composite 18 B naira, reinsurance 20 B naira, 2021. Insurance Act 2003, primary legislation. Compulsory insurance, third-party motor, group life, Pension Act, marine, imports, public buildings. Insurance penetration Nigeria, less than 0.5% of GDP, South Africa, over 12% of GDP. Challenges: fake certificates, claims delays, low awareness, poor enforcement.